After consistently underperforming for the past many years, Tata Motors seem to be finally on the cusp of a positive cycle. We all are aware of the fact that how the management is focused on conserving capital and aggressively scaling back their Capex. In fact, for this year, FY21, they've already announced a Capex cut of more than 30%. Rationalization of cost and Capex cuts could improve efficiency and could also ensure strong cash flows for the company. Do remember, the management had also during their AGM given the guidance that they want to be debt free over the next 3 years, which also provides strong visibility for FCF generation. JLR, in fact, in Q2 has already witnessed a £300 million increase in cash position driven by FCF generation. In Q2, they witnessed good volume pickups as well in their key markets. China's early revival could augur very well for the company across the world. Different economies are coming out with stimulus packages which could aid demand further. Project Charge for JLR has been delivering desired result. In fact, in Q1 they saw a £1.5 billion total savings and cash flow improvement ahead of expectations. TML also said to be looking for strategic partner for JLR, just like how they partnered with BMW recently. As far as the domestic business is concerned, the PV business is concerned, TML is also looking to reduce fixed costs there. Their recent model launches have done well. Volume pickup has been very impressive in Q2. In fact, TML is also said to be seeking a strategic partner for its loss-making passenger car business. They have quashed those rumors, those reports, but that is still something that the analysts are closely watching out for. They've also seemed to have initiated non-core asset monetization process as well at the company. India businesses behind peak Capex cycle. Improvement in volumes is something that could help boost the performance and help boost the volumes. To remember, they enjoy immense financial flexibility by the virtue of being part of Tata Group and strong promoter backing of Tata Sons. So once the business normalizes at JLR and in India, margins are likely to improve with rising share of profitable models.
Talking about the downside risk for Tata Motors, you got to see JLR has been not doing quite well. JLR has been consistently losing share in the global SUV market. So that is a big concern already for the company. And now the delayed economic recovery, prolonged slowdown in key markets is something that could impact JLR, and further the massive slowdown in the luxury car segment. Overall, the failures to launch any new products are other key concerns for JLR. Overall, if you see, the street is awaiting a better clarity on the overall deleveraging roadmap, and that is still an overhang if the clarity is not coming in. JLR's volumes are also not are encouraging, they're recovering, but it is not as much as its peers, so it's not doing as well as other peers in the sector are doing. Overall, if you go to see, management has taken some cost-cutting efforts, but the lack of any product pull could lead in higher discounts and in turn lead to lower volumes. That could offset the overall management's efforts to cutting costs, and that could be a major impact. And obviously, JLR could face a lot of stiff competition coming in from Tesla in the EV segment as well. Now, talking about this sluggish macroeconomic environment in India can overall impact this domestic CV industry as well, and the lower volumes are already resulting in the negative operating leverage, and that in turn we are seeing that there's a net automotive debt also, which is much more than the market cap of the company. So till we do not see the volumes recover or do not go back to normal, this cash burn could continue, and the rising debt will continue eroding into the fair value of the equity of the company. Now, overall volatility related to forex is also could impact the profitability of the company, and other downside risks are no Brexit deal, longer than expected business recovery due to COVID, India-China tensions, and US-China trade war deal are some of the other concerns for the company.